A support or resistance line looks obvious before you go into the trade, right? It slows down just as it gets there and you feel this is it, it's going to reverse. So you enter and within minutes you're stopped out. A few minutes later, it turns back up and shoots up without you because you're already in a loss. The guru said this works. They make millions according to their videos. So what are you missing? That's what we're going to get into today. They teach you to mark zones, right? And they say, look at the touches that this has had here. They teach you a trading strategy for how you can trade it bouncing up and down off this, going long, going short. Easy money. Kind of looks clean. Kind of looks simple. We like simple, but price treats those lines like suggestions, not boundaries. So if it's not the lines, what is it? Large players need places where they can place very large orders without moving the price too much. That only happens where real money has already stepped in. Lines show where the price touch. Volume shows where it transacted. Okay, enough theory. Let's look at AXS. This line at the bottom I've drawn on. I just chose it because here we are at this point. It's bounced back to it. It's bounced off it before. It's bounced off it before. But I can't see any clear reason why, can you? Let's go up a higher time frame so we can go back in time more. Here it is now, 2nd of February 2026. Bounced off it on the 20th of January 2026. Had it as resistance back in October 2025. How far back does this go? Resistance 6 years ago in February 2021. What the hell is going on? Another example. Similar thing. 2nd of February, 8th of January, 28th December, 7th December, 30th of October. This is all just crazy, right? Is it kind of voodoo? No, it's not. Here's the shift. Stop drawing lines. Start marking where volume piled in. A line is an opinion. Volume is evidence. And this brings us to how I do it. I'm going to introduce you to 2 new things. I use them in my videos all the time, but this is a deeper dive. The first thing is points of control. You find them in TradingView on this menu at the top, Session, Volume, Profile. And I use the 4-hour. Look at all these white lines. The longer the line, the more powerful the point of control. I refer to them internally as POCs. Can't be bothered saying points of control all the time. Now let's look at that line we had drawn here. Look at this. This line that I drew as a support line is actually a strong point of control. And you would find that if you went back to February 2021, there are other points of control right there. So what I do is I change that to a point of control. Now I tend to put on also the point of control for yesterday. Now points of control, let me explain them. They are effectively the most traded area in price on any particular 24 hours. 0-100 hours UTC to 23.59 UTC. And the white line is where the bulk of the volume, you can see all this here, right? These blue and yellow. The bulk of the volume took place around this price. And that becomes the point of control for that day. They are literally like magnets for price. Allow me to repeat myself. They are literally like magnets for price. Test it out. Prove me wrong, because I'm not. I've used this for a very long time. They are fantastic. So if I put on here, if I was trading this, I would put on this as the point of control for yesterday. POCY. For the benefit of this video, I'm just showing you that they match what you would normally call support or resistance. Let's put one up here. Let's put a few on. I want to show you how this works. Back to the charts. Look at this one down here. Price hugged it. Look at this one here. Got hit as resistance, then supported, then flew through. Comes back down, now it's support, goes back up. Goes to the next one, resisted, shoots through, Do you see the pattern here? You can draw them yourself. You will see this over and over and over and over again. So that's points of control. But there are other confluences that come into play, other reasons why a price comes down to this level. And this is where the institutions know there are orders waiting to be filled. They have massive amounts they need to trade. They can't just trade up $100 by taking your stop loss. That's not going to work. They're trading hundreds of thousands of dollars. They need a ton of liquidity. And what they use for that are order blocks. Look at that. It's like peeking behind the curtain of the institutions, isn't it? This very large green candle left liquidity in its wake. It went up so fast that lots of orders couldn't get filled. And here they are in a block that you can visualize on a chart. Now, how do you put this on a chart? I'm going to show you this. Order blocks and breaker blocks by Lux Algo. You simply go to indicators, type Lux Algo. They have many. They're very good. And I use quite a few. So now you can see we have more than one confluence that's holding this price up here. Let's just delete all of this for a second. We have no idea now, do we? We're sat here wondering, well, is it going to fall through or not? Oh, says I. Now I see it has real institutional support. Does it mean they always win? No, of course not. But it is an added confluence. You have an order block and a point of control going all the way through here. And this is how support and resistance actually work in reality. The gurus don't often teach you this. Something else about order blocks. Look at this one up here with the dashed lines. I'm going to scroll back to where this was formed here. You can see the green box, then suddenly the price goes through it. When an order block is broken down or up, it's called mitigated. So this order block becomes mitigated. Once that happens, this is a bullish order block. It becomes a potential breaker block. And what that would mean is that the bullish order block potentially becomes a bearish breaker block. And as you can see, it couldn't get through it there. It sort of was rejected there, and it was rejected there. So order blocks can have two purposes. The order block unmitigated, then after it's mitigated, it's flipped and does the reverse. Doesn't always work, but it's yet another confluence to look for. So that breaker block is now resistance. Let's put on a line there, turn off order blocks and go back to points of control. Well, wouldn't you believe it? I would, because I kind of knew. I hadn't checked it, but I kind of knew. There is a point of control there also. So we can now make that a point of control. And there you have true support and resistance lines. Not just hope, proof, institutional proof that that's where they're trying to take price. So, quick reminder, points of control. This menu, session volume profile on TradingView, order blocks by Lux Algo, order blocks and breaker blocks. So now you know what support and resistance really are. These levels are earned when price proves it matters. The price comes from participation by institutions, not reactions. Hope is waiting for price to respect something unproven. Earned levels reduce uncertainty when trading. This is the difference between planning trades and guessing them. Okay, thank you for getting to the end. Please subscribe, like and share. Drop a comment with any questions you might have. I will answer them. See you in the next one. Bye bye.